Hey there, people. How are ya? Hope you're doing great as always. And let's take a look at the week that transpired. We've seen a second week in the green. S&P 500 rose 1.8%. So it almost feels like we might be through the woods at this moment. But again, my guess is as good as yours. You never know. That's why you want to have all the right information. And as always, invest in quality businesses that will do better over time. But let's take a look at the events that might affect your portfolio. Let's get into it. What's the value of a nickel? If you would think it's just 5 cents, you would be sorely mistaken. It actually costs 9 cents to produce a nickel. But jokes aside, nickel, as in the metal, is an integral part of lithium ion batteries. And while there's certainly enough nickel in the ground to support the surging EV demand wave, high grade nickel mining projects aren't as popular as you would think. We just simply need more nickel to have more energy density in the batteries. And the current situation on the Russian Ukraine border is bringing a lot of concern considering the supply chains, and it sent the prices of nickel skyrocketing to over 100,000 per metric ton. And after a few wild weeks of trading, nickel is now being priced around 31,000, which is still far more expensive than the 21,000 it was starting 2022 with. And the price jump is just very bad news for both the EV makers and the consumers that were more or less expecting the deflationary prices in tech and EV as producers are getting more and more efficient. And that means that the EV prices could remain elevated for longer than expected, especially in the US, where there is actually only one primary nickel mine, and that's the Eagle mine in Michigan, which is expected to actually close in 2025. So, bad news for the EVs in the US. However, there could be some solution to this issue. One is for more nickel mining projects to get off the ground with environmentally safe practices that allow the US to keep nickel mining in house. And Tesla has already secured a supply deal with Tamarack Mine, a refinery project which is expected to open in 2026. The other solution is to accelerate the development in battery recycling tech to meet market demand. Lithium ion battery recycling is still new, but companies like Li-Cycle and Redwood Materials are working to make this reality. Better battery recycling practices could reduce the EV space's reliance on the raw nickel, despite the fact that demand for the metal is undoubtedly set to increase over time. Crypto hype train is getting some serious speed, and many of the big dogs are getting on board. One of the recent additions into the, well, I would say, mild crypto bulls is actually Ray Dalio. And with 150 billion in assets under management, his Bridgewater associate is the biggest hedge fund in the world. Now, of course, it pales in comparison to someone like BlackRock with nearly 10 trillion of assets under management, but 150 billion is still no freaking joke. Dalio was a long time cryptocurrency skeptic, but ended up changing his mind in a big way somewhere in the mid of 2021. And in fact, after naming the popular, it's not a good store of value because it's too volatile, and it's not a good medium of exchange because it's too volatile arguments, Dalio ended up calling Bitcoin one hell of an invention. By December of last year, he was holder of both Bitcoin and Ethereum. And in January, Dalio told investors that they should probably hold 1 to 2% of their portfolios in Bitcoin. So Dalio believes that Bitcoin's greatest risk is its success, quote unquote. I suspect that Bitcoin's biggest risk is being successful, because if it's successful, the government will try to kill it, and they have a lot of power to succeed. But if success is a problem, it's certainly one of the better ones you can have. At least Dalio's firms think so. Bridgewater Associates will be investing in an external vehicle linked to the price of Bitcoin. And all this buzz is giving the crypto market a nice boost. The total crypto market capitalization reclaimed the 2 trillion level this week, with Bitcoin rising above 42,000 and Ethereum topping 3K. The cannabis stocks were on fire on Friday after the House of Representatives announced that they will be considering a bill to federally decriminalize marijuana next week. The biggest move of the day were experienced in Tilray of 22.8%, Sandel Growers at 8.8%, Canopy Growth at 10%, Aurora Cannabis at 10.4%, and Kronos Group at 6.5%. The Marijuana Opportunity Reinvestment and Expungement Act, or MORE Act, would take Mary Jane off of the scheduled substances list as well as seek to expunge prior cannabis convictions. A similar bill passed in 2020 but stalled in the Senate. This bill might end up following the same path. So come on, Dems. Like, this could be an easy win for you. Everyone wants this, so let's make it happen. If you bought the dip around March 14th bottom, chances are you are doing quite well over the past 2 weeks, maybe even good enough to offset at least some of the 2022 losses thus far. Maybe not all of them, but if you bought the dip on any of these stocks I will be mentioning, you are a very happy person right now. GameStop surged whopping 92% over the past 2 weeks, Tilray 75, Avis Budget 63, Shift Technologies 51, AMC 46, and Alibaba 43. Some meme stocks have made a sudden resurgence as investor optimism surged following the Fed's latest interest hike as market began a fierce rally. With the Nasdaq up just under 12% and the S&P up just over 8% in that time frame, it's been a nice break from 2020's dismal performance. But there are still some interesting names that haven't joined that crazy rally yet, and those names are heavily shorted. So maybe if the market keeps rising, we should keep our eye on some of these popular names for potential pops. Beyond Meat is still 40% of float shorted, Lemonade 37% shorted, GitLab shorted 37%, Dutch Bros shorted 33%, Shift Technologies still 33% shorted, Smile Direct Club 30%, Tattooed Chef 30%, and Corsair 28%. What happens if the shorts need to cover? That's going to be interesting to observe. Automatically recurring sale is basically the holy grail of any business. Think back to the subscription box phase. If you can get 50,000 people to pay you just $20 per month, that's 12 million revenue per year. Now add a few zeros to that, and we arrive at what Apple, arguably the most successful tech company in the world, is planning right now. According to anonymous sources familiar with the matter, Apple is working on a subscription service for the iPhone and other hardware products, a move that would make device ownership more like paying a monthly iCloud fee, albeit more expensive. This would be Apple's biggest push into auto-recurring sales to date, although the project is still in development. But it would also be a huge strategy shift for the tech giant. The iPhone is Apple's largest source of revenue, bringing in 192 billion last year alone and accounting for over 50% of sale. The idea would be to make buying an iPhone or iPad the same as paying for an Apple Music subscription each month. Instead of paying outright for the product, you get to stomach the price over a long period of time without worrying about interest payments on debt. And for Apple, the benefit could mean bringing even more revenue for the same amount of products sold. The first for Apple, but not the first. Apple has worked out installment plans offering buy now, pay later services, but has never offered hardware products as an actual subscription plan. Other companies have, however. Peloton recently started testing a subscription service for its bike and fitness content between 60 and $100 per month. Google also tried the same approach with its Chromebook laptops to target corporate customers. So those were roughly some of the more interesting snippets from the past week in the market. If you liked my rambling, follow me on Twitter, subscribe to the channel, connect with me wherever you can. Leave me a note in the comment, what do you think about some of those news? Are you bullish on the EVs, on the marijuana stocks? What's your play? Let me know and talk to you soon.